What's up, guys? Welcome to another episode of Liam Trends. We'll be analyzing BTC and Ethereum on the higher time frames down to the lower time frame to see how best you can take advantage of the opportunities the market provides. So sit back and relax as we delve into the charts. We'll be starting on the weekly time frame. This is no clickbait. You can see this week on BTC, which was created on the week of May 9. We expect BTC to come back and fill this week. We expect BTC to come back and fill this week. If we go back in time, we see this week over here. The November 29 crash. We saw BTC gave us a week to the downside. See that subsequently, we saw that BTC came back to fill this week. Also, if you remember the May crash in 2021, we saw that BTC also gave us a week, and in time BTC came back to fill this week. So see that BTC on the higher time frame, especially on the weekly time frame, is known for filling the week. So this time around will be no different. So expect BTC to fill this week. Remember, no content in this channel should be construed as a financial advice. This channel is strictly from educational purpose, empowering traders with trading setups so that they can be successful traders. So we go on the lower time frame. This was the trading setup we had in our last video. We expected so that BTC broke the support trend line and gave us a lower low. Remember from our last video, we expected BTC to give us a lower high so that we can sell the market to the downside. This setup is still valid. For those who are coming to the channel for the very first time, let's go back and see how we came about this setup. We go to the 4-hourly time frame. We go back to the 4-hourly time frame. On the 4-hourly time frame, we took our Fibonacci from the swing high, which is this level here, the level of 34,782, down to the swing low, which is this level, which is the level of 28,213. We're able to spot our 0.5 Fibonacci retracement as a level of 31,496 at 0.6 Fibonacci retracement as a level of 32,273. So we expect BTC to come over here, come to this retracement level and give us a push to the downside. We saw on the 4-hourly time frame that BTC broke the trend to the upside, the retracement to the upside, and gave us a lower low. We go down to the lower time frame. On the lower time frame, we took our Fibonacci to see how we can take advantage of this trade. We took our Fibonacci from the swing high to the swing low. As of that time, remember, it was around this place. Remember, our Fibonacci is very flexible. We're expecting this place, the level of 28,289 or 28,898 to be the lower low as of that time. Also that BTC did not give us a retracement from this level. Instead, it went lower to the level of 28,695. So this is where we take our Fibonacci from. We expect BTC to sell the market to the downside at the level of 0.618 Fibonacci, which is the level of 29,922 or the level of 29,683. So at this level here, I actually sold the market to the downside at this price level here. Remember what I used to say, that when you enter a trade from here at the 0.61 Fibonacci retracement, you put your stop loss at I liked putting my stop loss at the 1.16 Fibonacci level. And so though currently in the negative, but we expect the market to give us a push to the downside. Remember, this is no financial advice. This is what I see on the chart. I want you to look at it yourself and take trading actions. Remember, what you do with your money is up to you. So we expect BTC to give us a push, an impulsive move to the downside. If you look at it, that we'll go to the 0.618 Fibonacci retracement. BTC did not respect this level. Instead, we still had push to the upside. That's why you need to put your stop loss. Give the market room to give the market space to do its thing. You see BTC consolidating at this level here. You can see that if BTC is not respecting this Fibonacci retracement level, it could actually be respecting the previous higher high which is the swing high at this level here, the level of 31,360. If you take a Fibonacci from this level here down to this level, you see that we are actually consolidating at the Fibonacci between the 0.5 Fibonacci 0.5 Fibonacci level, which is the level of 30,277, and the level of 30,342. So on the higher, if you are using the higher time, the previous higher high, we're actually still consolidating at the Fibonacci level. So this our trade is still valid. Remember my stop loss, we are using this level. This is where I put my stop loss here. So if you look at it, this is still a very nice risk to rewards trade. If you take a short from here, which is where I entered this trade, take a short from here down to the third take profit, which is the level of 26,312, and the stop loss at the 1.16 level. You see that this is a 3.5 risk to reward standpoint, which is a very good one. Usually we advocate having at least 1:2.5. This is 1:3.58. So this is what I see on BTC. Our trading setup is still valid, so we expect BTC to still give us this move. See, this is already, we have 1 day to the weekend today, so we expect BTC to give us a volatile move today. But we do not trade on the weekend, so I won't advise entering a trade on the weekend. So but if we can see BTC consolidate, if it gives us the move, most likely today it give us a move to the downside. On Ethereum, we also had a trading setup on Ethereum too. We go to the higher time frame. On our last video, we had our Fibonacci at this level here. We expected Ethereum to give us a push to the upside, but we saw that Ethereum still dip lower. So we extend our Fibonacci to the low of 1,901. Our Fibonacci level is the level of 0.5 Fibonacci level is the level of $2,000 and the level of $2,023. So we see that Ethereum is currently consolidating in our Fibonacci retracement level, and this is where we enter a trade. This is where I will be entering a trade. On Ethereum. So I could enter a trade on Ethereum at this level here, at this level of 20,019, short the market. We have our first take profit on Ethereum. As the level of 1,856. Second take profit at the level of 1,753. And the third take profit at the level of 1,665. Remember, it's always advised risk management. Trading is a very risky game. It's not a game, it's a very risky skill. And so risk management is key to an efficient trader. For me, trading is more of risk management. So we put our stop loss here at the level of 2,130, and so it's a 1:3.3 risk to reward risk standpoint. So you see, this is a very good trade, and we'll see how the market respects the Fibonacci retracement levels. So this is what I see on BTC and Ethereum. Remember, this is no financial advice, so you want to look at this and take action. If you're new to this channel, click on the subscribe button. Click on channel notification so you're being alerted when we make new videos, daily technical analysis. So support the channel by hitting the like button if you enjoyed the video. Thank you very much.